Hey, there's Bob from Trade Genius, 2nd of June. Normally I do these videos on Saturday, but I got to kill a little time here before I can start the weekend. But, I titled today's video really an act of desperation. And so I think they're trying to create some pain trades to get out. And I'm going on my stuff volume from big to small. I'll skip a bunch of stocks. I'm just going to stay with the more liquid names. But if you look here, so today was the employment report sucked, and the economic news is just bad, and yet we just keep getting squeezed higher because there's literally no volume. So basically now with 60% of the market in passive funds is that it doesn't take much volume to move the market higher. And so, we've had this for IWM, I'll get to in a second, a 6% move in 2 days, which is just, you know, not normal. I mean, we had no price discovery, and then all of a sudden people realized that IWM was 6% undervalued. I don't think so. It was absolutely an engineered squeeze so that people can get out of their trades or to squeeze people who are leveraged onto the short side. And that's all it is. In fact, it gave a lot back, and I'll get to that in a second. But look at financials. They're red today. I mean, they're red. They did not participate. This is all you need to know. The Fed knows that they are in big trouble with the economy, and really, it doesn't even matter what they do for their rate announcement, because the economy is just done. And if they raise interest rates, they're going to just push more people and things into default, and anything variable goes up. And they're going to do it for one reason only: is they're trying to push money into the banks, because they're not going to charge the banks more for their reserves, excess reserves that they gave them, that they give back to the Fed. So they keep a bigger and bigger spread, and they're trying to push money into the banks while the rest of their businesses are absolutely collapsing. And so if you think about it, you got oil, right? If oil keeps falling, which we had another beautiful trade, oil with the day trading money machine. I just encourage you guys to get it. It just works. It's just amazing. Everything else is just crazy, and this thing is just sweet. And so oil went down to 46.76, I think, overnight. It pushed it back up to close to 48. Yeah, and primarily reason is nobody wants to really be short futures on oil over a weekend when you never know if a war is going to break out somewhere where it'll affect the price of oil. So I would look to, I covered my short from last night, day traded a little bit, and now just I'm flat waiting till Monday, but we're going to continue down. If oil keeps falling, and it gets below 45, you're going to start to run into some bank covenant issues, and then you're going to see a lot of the producers will start shorting the oil market with the price going down to protect their production, and that's just going to cause a great deal of grief, with the banks. And the banks also have issues right now with auto loans. They're blowing up everywhere. Okay, and if they push those auto loans onto the bigger investment community, they're going to have another housing bubble kind of reverb back to them, and plus people are going to start to lose money. And you got Puerto Rico, the muni fund market's going to start blowing up, and then you have retailers blowing up. Jim Bree just filed. It looks like they're going to file for bankruptcy this weekend. Another retailer going down. Now, they said 25% of all malls will close in the next 5 years. I mean, how is that going to help, the commercial lending markets? And then all the cities that rely on that sales tax are going to be suffering along with it. And then your transaction business is falling. So, I mean, banks are in big trouble. The only thing that's kept the banks solvent is the Federal Reserves from around the world. And the banks act like they're the smartest guys in the world. All they are is they have an unlimited cash register. They're literally drunks in Vegas that can just keep going back to the cage and just keep getting chips and keep putting it on black to see what sticks. And we're going to roll over again. And it's just, this time is going to be absolutely brutal. And that's why I keep telling people this stuff here, these 1%, 2% moves, if you're an investor, not a trader, you need to be exiting. And I hope you are. That is what's called prudence. As it goes up, you should be scaling out, not sitting on your butt thinking it's going to go up again. What's it going to do? Go up another 1, 2, 3%? If the thing falls 20%, it's going to cause you 40% to get back to even. So I'm just imploring you, to start talking to your financial advisors. And I'm not the only guy. I mean, there's some very smart people that manage a lot more money than I do that are like, man, we're in cash. This thing's going to blow up. It's going to get ugly. And then you have everybody sitting passive. And the reason why they don't want to take your money out, because that's how they get their management fees. But you got to take control of your own destiny here. I'm just begging you. And if we move on to SPY, SPY actually popped up, went flat, and pushed. We had 35 million shares traded today. I mean, I have to check. Maybe the end they balanced up higher. That's nothing. Apple was trading 20 million shares today. So they're just pushing it around. And I gave you the example before. And a better analogy for people to understand is you're in a game of Jenga right now. All right? And a lot of the blocks have been taken out. And they keep stacking. And it's getting increasingly unstable. And, if you look at this, is that you just simply have to go get a chart of the futures market, pull up a yearly, and look at the thing they call point of control, or ask somebody if you don't know how to do that. And that's where the volume is, and it's way, way, way below where we are today. This has just been a climb that people are coming along passively, and once we start going down, people will get active. And they'll call their broker, say, get me out, get me out, get me out. By then it'll be too late. You'll be down 10, 15%. Just like what happened at the end of 2015, the beginning of 2016. You're down 18% in 3 weeks. That's what I'm foreseeing. And it takes 36% to get back to even after that move? Just saying. And money flows rolled over today. So I'm saying there was just no buyers today. It was all just short covering. IWM, this is bearish. So they pushed this thing up 6%, and then as soon as Europe closed, it started selling off. There must have been a fund in here that they found that was vulnerable, and they made them pay. So I bought more IWM puts when it got to 140, and I doubled it at 141. I kept half on at the close for next week, and I'm fully expecting this thing to retrace at least this move, and I'm fully expecting this move to be retraced as well. Oil companies and banks are chock full of the small caps, and this has been a weak sister, and all they did was they just pushed this thing back up into the range again. So this is to me is a short. VXX actually was positive again today. They've milked this cow. GDX was positive today. They've milked that cow. Gold and silver and the miners are just done. They're not buying this anymore. So they can't even push them down. You're getting strong hands now in the miners. And so if you get dips, buy them and hold. So we're still holding our dust puts. Like I said, we're going to wake up one day and dust will be 20. And people are going to be like, what happened? Apple, this is why the market went up today. They drove Apple up 1.5%. On what? What did Apple do differently than yesterday? It's just a funding mechanism. XLE is still a little weak. It's getting pushed down there pretty hard. You could get down to about here. And then I think probably the move's probably done for a bit. We talked about small caps. There's Nugget holding on. GDXJ up almost 2%. SDS sitting pretty much right on the floor here, and The low of the day for SDS was 1253. I put a 1250 on it, and I think who knows? They may grind this thing up, spy up into the Fed meeting. I don't know. I probably are thinking people are going to start getting pretty nervous, getting ahead of that meeting that's coming up in a week and a half. At least I would be if I had a lot of money in stocks and bonds right now. XIV was even down today. XOK due to Apple. UCO, we had a great UCO put trade on, an SCO trade. I think it has more room to go, but took profit, made 40% on it in one day. Can't argue with that. And those in the stock went from 40 to 41. And I told people they really want to hold it. They probably can. I think oil's going down. I think Russia told us the price is going to 40. I agree with that. I always said that oil's going to go below 40. There's just no demand, and supplies coming out of our ears worldwide. So we had a good trade on oil. So I don't think it's done yet. Talked gold, talked dust, TNA. So I bought IWM puts. I was thinking about TNA puts, but I just stayed with the non-leverage right now. SLV positive. Look at this, up 1%. Okay, so market sniffing. Okay, real estate was up. UNG, it looks like a bottom, but I think it's gonna fall further. We're going into the season where we don't really need the natural gas to such a level, and so I think we're gonna get a flush before we move higher. Look at that move. That's why IWM went up. They lifted the biotechs hard. And I think that move's played itself out. And it's just amazing to me. That's a pretty good move, 5% move. Did I get that right? Yeah. Amazing. MOS just still can't get out of its own way. I'm convinced it's bottomed, but I think it's just going to take a while for it to get some movement. I think if the dollar rolls over, MOS flies. I think that's part of the reason why it's been held back, I should say in correct English. We talked about the servicers. Here's the Amazon stock. FAS, I have FAS puts for June. So the Friday after the Fed meeting, I have 42.50s. And I fully expect to be paid with profit. Talked oil, SH, AG. We're in AG full position. Like I said, we'll make good money on AG. And I have full position in wheat and precious metals, and I'm up to 2,000 shares now, and I'm going to, I have a sold put on for next Friday, naked. So if it hits, I'll be 3,000, and I'm selling calls against my position here too while we're stuck in this range. So I sold the 2050s for next Friday too, and I probably won't do anything. If I see this trend line here, I get a crossover like here, but to the positive, obviously, I won't sell calls on it anymore, and then I'll get more aggressive in my sold puts and leave the positions run free, and then see if I can bank some coin, and then rinse and repeat. Talked about them. Talked about that. Talked about that. Dollar started rolling over. That is not good for the market. It's been counting on a higher dollar. Drip, guys cashed in today. Thought it would fall further, but yesterday kind of hit and started to reverse. Mentioned to some folks that they may want to take a position in it, and it definitely paid them yesterday and into today. Waiting on that gas. These ags are just getting crucified. I'm not really sure what the problem is anymore. I just think that the futures markets are all captured, with a lot of money, and they're just killing anybody who produces anything of value in this world. So the parasites have all the money, and they just make people give up their hard-earned efforts for nothing. And then they get to pocket the difference, because you don't see the coffee prices falling at the grocery store, I don't think. I don't see my price at Starbucks going down ever. So they're keeping it, which is modus operandi for them. DVA is just hanging tough. We're in full position there. Same with sugar. My goodness. Same with sugar. So I don't have cocoa up. I have to check if cocoa's falling too. Then there's something going on in the tropics that we're producing bumper crops. But I haven't heard that. The yen was up today, which really surprised me that the market was up. I think that's why they used biotech and Apple today to lift the index, because this is usually a funding source for them. And that's why gold and silver, well, not even the mines, really gold and silver were up today based on this. And usually this supports oil, but oil's kind of, I think it's in its own way right now. BIS, I missed this trade. I called it out to everybody, but I didn't take it myself. So annoyed. Wheat kind of hanging in there. If we get any kind of retest of this right here, I'm buying with some size to see if I can catch a nice move back up to VWAP. Seems that to be the play with wheat. Corn's at VWAP. This will be a great short here, probably in another week or two. JGG, we're in a full position, just now waiting, hanging out. If it gets over 28.14, I'll sell half of it. I put this one in there just kind of want to see what ultra technology would look like. Thought maybe I'd buy puts on it at some point, but man, there's just no volume in it. So I'll probably take this thing back off. But tech and biotech and the financials are just gonna get roasted here when this thing rolls. Still waiting on SILJ. No sense in taking on more positions in miners until I get a little bit more sense of trend. You got VVIX. You got the VIX that they pushed down a little bit today. Amazing, 9.78. But look at this. You know, the 10-year now is at 2.15. We have a flat yield curve. I mean, everything that you're taught as a trader when you look at correlations and analogs and data and relationships and cross relationships, everything tells you that this market is sending you flares. They're shooting atomic bombs at you, saying that get out of this market. And the algorithms and the Federal Reserves and the central banks are just grinding this thing higher for purposes known only to them. And I guarantee you're going to be left holding the bag. I mean, 2.15% on a 10-year. I mean, we're getting down again. If we get under 2% again, I mean, that was like depths of despair time in the markets. And so, you know, people are going to make a lot of money being long bond, but you're not getting in. See, look at this. They've just been grinding this thing down for 2 months. Smart money's in. One of my subscribers mentioned that he heard me on the radio or the YouTube talk about getting into TLT. He's up 60% already. And he was leveraged. But, I mean, in 2008, non-leveraged TLT was up 100%. People always ask me, the market's going to crash. Where should I put my money? Put it in TLT. You know, it will double. And even at these levels, you'll get a double out of TLT when this thing crashes, because the 10-year will go negative on the next crash. Trust me, people will be scared witless next time. Okay, because they've seen this movie before. It can only happen 7 or 8 years ago, and people are going to say, "Get me out, and get me out now," and they're just going to move everything in the bond market. I mean, literally, it's going to be one of those moves. And we're just getting suckered. And I'm so annoyed by it. Because it just, it makes people like us who've been raising the warning flags, we look kind of stupid. And then 2 months later when we're well vindicated, it doesn't feel good at all because you just see the mess that's been made. And this mess will affect the economy too. So, but anyway, I think I rounded up and I'm going to enjoy my weekend. We had a very good week, in terms of the action in oil and the metals, the miners, short in the broad market, not so good. But you need to have something short right now because you'll be well paid when this thing rolls because they won't be able to control it. See you guys later and have a good weekend. If I see anything of interest, excuse me, I'll point it out. Bye-bye.